Good morning. It's Market Day Report. Okay, it is a day full of reports from USDA. The first one, weekly export sales report. We'll break that down as we go through the markets this morning. Let's start with the corn market. And overnight trade down 3 on the March at 486 3/4. New crop December 462.5, down a penny 3/4. Soybeans in the overnight session. After moving higher yesterday in the trade, beans lower overnight, down 11 1/4, 1054 1/4, and the May 1067 1/4, down 10 1/2. Soy meal yesterday was lower, and in the overnight session lower as well. Soy oil settled higher yesterday, but lower in the overnight session. Kind of seeing a trend here, right? And it continues with wheat. July, Chicago. Nickel lower, 573 1/4. By the way, all 3 wheat exchanges in the red to wrap up Thursday. Overnight for Kansas City, July, 583, off 6 3/4. And the December for Minneapolis, 644 3/4, down 6 1/4. Cotton market was higher yesterday and higher in the overnight session. December 69.80, up 34. President, Midwest Market Solutions is Brian Hoops. All right, Brian, weekly export sales, but no flash sales.
Yeah, good morning, Tony. Had, quite a bit of news overnight and early this morning. The weekly export sales you alluded to, corn about 65 million bushels, soybeans 55, so some good numbers for both corn and soybeans. And the big thing, really no cancellations. We've seen cancellations last 2 or 3 weeks, but not much as far as today's report goes. So that was considered somewhat friendly, I think. Wheat was only about 6 million bushels, not a great number at all for the wheat market. No private export sales, as you mentioned. In fact, it's been a very sparse week of export business on a private analyst sale basis. Only the corn sale earlier in the week, and we've had virtually nothing as far as soybeans this entire week. Now, the big news, I think, actually came out last night, and it caused us to open lower in the night trade. In fact, meal gapped lower last night off of this news, and the Argentina government lowered their export taxes by about 6 to 7% on soybeans and soybean meal, about 3% on corn. And this is an effort to encourage farmers to sell rather than store the crop. They're lowering the taxes they would have to pay on crop that's sold. Now, of course, they've had a drought last year. They had some drought experiences this year where crop conditions are on the decline. Crop size estimates of both corn and soybeans in Argentina are on the retreat right now. So they're trying to encourage, in theory, this will encourage farmer selling of crops, corn, soybeans, soybean meal, rather than storing anything. So it's perceived as bearish as more crop will be hitting the market. It doesn't really add supply. It just puts that supply onto the marketplace sooner. And so we saw weakness overnight. Also, some of the weather models are looking a little bit wetter for Argentina. Of course, we know we've been very dry. They need rain badly, and these models are turning much wetter for Argentina, especially the southern part, and that's pressuring these markets as well. Northern Brazil, where they're starting to harvest soybeans, they're only about 2% harvested, a little bit behind normal. Dry weather is what they desire there, and that's what's in the forecast. So a lot of the news, a lot of the fundamentals are starting to turn against these grain markets, especially soybeans and soybean meal. That should be the downside leader. But every time we've seen this in the overnight here in the last week or so, speculative buying interest comes in, buys that overnight lows and pushes the market higher during the day session. That'll be kind of the key for bulls, is if we see that speculative community step in on a lower opening this morning, buy this market and try and rally it back up near the highs that we carved out yesterday.
All right, Brian, hang on. We'll take a break. We'll come back. We'll talk livestock futures next. Market Day Report continues after this. We'll pick up a cattle on feed report after the close today, and then we'll try to work our way through that report as far as the trade goes on Monday. But the expectation right now, Dow Jones expectation for on feed 99.8, 101.8 on the placements, and 101.3 on the marketings. All right, let's go to the live cattle market, how we settled yesterday. 201.10 on the February contract. 35 cents off the day's high, record territory, up 105. 95 higher on the April contract. It settled at $200.72. That's live cattle. What about feeders? Well, feeders yesterday higher as well, 277.07, up a couple of pennies on the front month. March at 274.07, buck higher, and the hog trade yesterday was really mixed. Front month up 65, but the April down 7 cents, 87.20, unchanged for May and June. Let's bring back in Brian Hoops, Midwest Market Solutions, and we keep an eye on cash trade as well this week, right?
Yeah, we were getting some cash trade to develop. We saw the 320 or 202 earlier in the week on a live basis in the Southern Plains. So, about $1 higher than what we saw the previous week. Starting to hear some of that 322 on a dress basis yesterday in Nebraska. So that's developing. That's $1 to $2 better than a week ago. And this cash trade just remains very firm. Now, the cutout values have not kept up with the cash markets here recently. So we've gone from almost a break-even type margin to a negative $69 per head. And, that's not going to be sustainable. Cash can't keep going up without the cutout values moving higher. So at some point, you're probably going to see packers maybe try and cut kills again, prop up those box beef values and increase their margins. You wouldn't be surprised to see some sort of profit taking coming in here sometime before the end of the month. That's another week from today, but you've got some time where you could see, after all these contract highs, all-time highs in live and feeders, market to see some sort of a big pullback just on a profit taking, and it wouldn't change the tone of the market. I think you're likely to see speculative community step in once again and buy a hard break in the cattle. Now, cattle on feeds out this afternoon. Maybe if it's a swing and a miss on the estimates there, maybe that gives us a reason to pull back early part of next week. But overall, that looks to be a supportive report if those numbers are realized that the trade is guessing.
All right, Brian, thanks for the insight. We'll see you back here on Monday, and we'll work our way through that cattle on feed report. Have a great weekend. Brian Hoops is president, Midwest Market Solutions.